Be Wealthy and Smart, episode 896.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to be talking about the strange happening of COVID creating over 5 million more millionaires globally. This is an interesting article I'm going to share with you because, number one, it has a global impact, so I can actually report globally how different countries around the world are doing. And secondly, it's interesting because this reminds me of hearing about the Great Depression, and that in the Great Depression, there were more millionaires created than at any other time. So while COVID is not a good reason for us to want to have more millionaires created, the fact of the matter is 5 million more millionaires were created through no fault of their own. But here's the thing. I'm not talking about the trillions of dollars that the mega rich already benefited from COVID. That report we've already heard, and we know that the wealthiest people became a lot more wealthy during COVID, mainly because, unfortunately, small businesses were the ones that were not considered essential businesses, and the large businesses, which favor the wealthy, are the ones that were considered essential businesses. So we had a huge divide there, which was completely unfair to small business. But nonetheless, it is what happened. We didn't choose it, we didn't vote for it, but that's what happened for various reasons. And some people will agree that it was a good idea, and some people will disagree with that. But what I want to report about today is why owning assets is so important, and how I think the answer to the great divide between the rich and the poor is about owning assets. You see, cash is never going to be the thing that increases in value and changes your net worth. Cash is simply something you can hold value in. But having assets like a home or a business or investments in stocks or cryptocurrencies are things that can increase in value. And one of the things I love about cryptocurrencies is the ease of purchase, and also because you can buy it without having to be with a major brokerage firm. You can buy it with an app on your phone. And also just the very low initial minimums to invest in cryptocurrencies, I think are really exciting because they're so accessible to everyone. And I think that's going to make a major shift in people's wealth in the future. But you know I think that, and you've listened to my crypto podcast. And today we're going to talk about what this article reported from the BBC about millions of people becoming millionaires during the COVID pandemic. So let's see what this article has to say. It says more than 5 million people became millionaires across the world in 2020, despite economic damage from the COVID-19 pandemic. While many poor people became poorer, the number of millionaires increased by 5.2 million to 56.1 million globally, Credit Suisse research found. In 2020, more than 1% of adults worldwide were millionaires for the first time. Recovering stock markets and soaring house prices helped boost their wealth. Wealth creation appeared to be completely detached from the economic woes of the pandemic, the researchers said. Lower interest rates and government support programs had led to a huge transfer of wealth from the public sector to the household sector, they added. This had prompted a surge in household saving, which had inflated household financial assets and caused household debts to be lower than they would be otherwise. The number of ultra-high net worth individuals, usually defined as those having investable assets of more than $30 million, grew by 24% worldwide in 2020, the fastest rate of increase since 2003. Credit Suisse said its total of the number of millionaires might be higher than other organizations' estimates because it included both investable and non-investable assets such as owner-occupied homes. Anthony Shorrocks, economist and author of the Global Wealth Report, said the pandemic had an acute short-term impact on global markets, but added this was largely reversed by the end of June 2020. Global wealth not only held steady in the face of such turmoil, but in fact rapidly increased in the second half of the year, he said. And then it reminds us what I said, that billionaires' fortunes rose by 27% during the pandemic. And it shows an article about the change in wealth per adult in 2020, biggest gains and losses, and it shows that Switzerland actually had the largest gains in wealth per adult, then Australia, Sweden, Belgium, the Netherlands, USA, Germany, Denmark, Canada, and Austria. And the losers in this situation, where they had less wealth per adult in 2020, were Russia, Brazil, Chile, Saudi Arabia, UAE, Hong Kong. Actually, Hong Kong was affected the worst, probably because of their housing crisis there, where housing prices dropped. The article goes on to say, however, wealth differences between adults widened in 2020, and Mr. Shorrocks said, if asset prices that increased, such as house prices that rose, were removed from the analysis, then global household wealth may well have fallen. In the lower wealth bands, where financial assets are less prevalent, wealth has tended to stand still or in many cases regressed. Some of the underlying factors may self-correct over time. For example, interest rates will begin to rise again at some point, and this will dampen asset prices. Total global wealth grew by 7.4%, the report said. Since the start of the 21st century, the number of people with wealth between $10,000 and $100,000 had more than tripled in size, from 507 million in 2000 to 1.7 billion in mid-2020. They said the increase reflected the growing prosperity of emerging economies, especially China, and the expansion of the middle class in the developing world. Then it has another chart that says millionaires could exceed 84 million in 2025, and it shows between 2020 and 2025 each of 10 countries and what their increases in wealth are, showing that China has the largest increase of wealth overall. Also, France, Japan, and the UK and Australia look pretty good with their increases in wealth, as does Germany, with Canada, India, Italy, South Korea, and Switzerland being a little bit more, and Spain being a little bit more muted in their gains of wealth for the last 5 years. The article goes on to say, Nanette Heckler-Federbe, Chief Investment Officer at Credit Suisse, said, there is no denying actions taken by governments and central banks to organize massive income transfer programs to support individuals and businesses most adversely affected by the pandemic and by lowering interest rates have successfully averted a full-scale global crisis. She added, the lowering of interest rates by central banks has probably had the greatest impact. It is a major reason why share prices and house prices have flourished, and these translate directly into our valuations of household wealth. But she added that these interventions have come at a great cost. Public debt relative to GDP has risen throughout the world by 20 percentage points or more in many countries. Generous payments from the public sector to households has meant that disposable household income has been relatively stable and has even risen in some countries. Ms. Heckler-Federbe said, a major reason why share prices and house prices had flourished was due to the lowering of interest rates by banks, which, she added, translated directly into our valuations of household wealth. End of article. Well, definitely interest rates will buoy the price of assets, and we've talked about the price of housing being buoyed pretty artificially because all of the houses that would have gone into foreclosure were put into forbearance and have not come onto the marketplace. So that has kept supply low, it has kept prices high, as have lower interest rates buoyed prices. So I think that is still somewhat of an artificial support, And should we see interest rates rise, or should we see the forbearance end and a lot of homes come onto the market? That could change the housing market quickly. But the thing nobody's really talking about is the commercial real estate market. I have yet to see any articles about the commercial real estate market, which kind of makes me think that that's by design. But the commercial real estate market is the one that is in most trouble, because there are a lot of offices that are empty. There are a lot of retail spaces that are empty. There are a lot of companies who have decided not to expand because their employees like working from home. And so the extra space they were planning to lease, they have decided to save that money and not lease extra space. So the commercial market is where I think the next disaster is going to come. And this fall, we'll look for what changes might be happening in that arena and what announcements might be made. But I wouldn't be surprised at all to see more pressure in the commercial real estate sector, specifically shopping malls and office buildings. Not all commercial real estate is in trouble. A lot of commercial real estate is doing very well, such as apartment buildings, nursing homes, storage units, things like that tend to be doing well. But the office space and mall space or retail space is what's really hurting. There's an overabundance in that area, and that means there's going to be some sort of adjustment that has to happen in the future, in my opinion. So we'll watch for that. We'll be reporting on that with you in the future as soon as we have any news from the press to talk about. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss important information. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.